loser story, and that is I bought a Tesla in 2019.
Okay.
Red.
Model
sexy.
S.
And then I wrote in a quarterly letter, what a terrific car. It was unlike anything my wife or I had ever come across.
Okay.
It was just, my wife hits 90 on the way to Boston most times. hasn't been nicked yet. But,
Right.
it's amazing. But I said, but of course, as a stock, different story, looks incredibly expensive. From that day, it's up 10 times.
10x
Right,
from there.
10x. Now, when I wrote that, it didn't have any earnings.
Right.
It didn't look like it might have any earnings. In fact, it looked quite uncertain that it would exist in 2 years.
Yeah.
And
Right. They had a cash crunch.
they had a cash crunch.
Right.
He was sleeping in the
Yeah. He was sleeping in a tent
Well,
building
in a tent.
cars.
Who knew
No.
that issuing stock would be bullish for the stock price? People couldn't get enough of it.
Yeah.
So if you say, how did it happen? He was such a wonderful propagandist that he talked the stock up way ahead of any possibility. And then he sold lots of stock,
Yes.
got a lot of asset, talked the stock up again,
Yes.
sold a lot of assets over and over again
Yeah.
until he had generated out of thin air a massive amount of real buying power, which went straight into these mega factories.
He manifested it.
It was not only a magnificent management problem, given that you had the money, but it was almost miraculous management generating the money out of thin air.
If you don't know much about Jeremy Grantham, he exists to appear in news articles or television interviews to do one thing and one thing alone: to predict the end of the financial world. If you were to Google his name, Jeremy Grantham, in the word bubble, you'll have endless results spanning decades in time. You know what they say, a broken clock is right twice a day, but when you listen to him closely, he's not necessarily wrong. Jeremy has a large fan base, so you can find works that delve into his calls on bubbles and the impending stock market crashes. But he's been right about the dot-com bubble and the great financial crisis. Maybe his timing has been off recently, and you can say that the Federal Reserve and other central banks across the world have instituted monetary policies, basically low rates, that have propped up the economies, and the governments have bailed out entire sectors to prevent cascading damage. But maybe we're seeing cracks now in the real estate market starting to form, which is the bubble he's been studying over the last few years. But what about Tesla? Let's listen to Jeremy Grantham on November 12, 2021, when Tesla is trading near its all-time high.
Let's talk about bubbles, but let's come in, if we can, through Tesla, because you've talked some about Tesla in the past. I mean, last time I checked, I think the market cap is something like 40 times what it was 4 years ago. Is Tesla a bubble?
Yes, that's pretty easy. And having said that, I'm the proud owner of a Model 3, and I do think they're magnificent vehicles, and I think Tesla has done extraordinarily well. But if you go back into the life cycle of the FANGs, Tesla is many multiples of the price to sales ratio that they were at this stage in their lives. And they have been brilliantly successful. So Tesla is A, assuming it will be brilliantly successful, and B, assuming it will be, in addition to that, multiples as successful as the other FANGs. And they are some of the great companies in the history of capitalism. So this is a big ask.
Yeah, I'm always reluctant to say it might be different this time, but let me ask that question. Could it be different this time when it comes to Tesla? Because it is at the crosshairs of a fundamental technological transformation to electric vehicles and a real fight for the climate globally, an important part of that. So is it possible that is different? There's a major transformation going on here that's bigger than what we've seen before.
I think if you were defending the FANGs, you would say in each case that they represented, like Amazon, a crucial fork in the road on retailing. If you were looking at Facebook and Netflix, all of them represent these breakout major changes, disruptive changes. And I'm very grateful for Tesla as a dedicated green that they have pioneered EVs. But now in phase two, every great automobile company, all the Mercedes and the BMWs and so on, and the VWs are all gearing up to go electric. And that owes a lot to Tesla. But now in phase two, they're going to have some serious competition.
Grantham was definitely right in some sense. Tesla's stock has indeed broken down since that interview, but he was a little off base when it came to the competition coming. An argument can be made, in the very least, that Mercedes-Benz is selling EVs at a profit, but no other manufacturers are finding much success in his so-called Phase 2 of the EV transition. Even the most staunch of Tesla bears can recognize the volume of electric vehicles that Tesla is producing and selling in relation to legacy auto manufacturers, and the growth of that volume comes with profits. What I want to bring up about Jeremy's recent interview with the Compound and Friends is the so-called praise of Elon and him being a wonderful propagandist. He tries to play both sides because Jeremy's actually a climate change activist who owns a Tesla but doesn't own Tesla stock. If there's one entity that made being green, quote, cool, it's been Tesla. Before Tesla, it's always had to be a trade-off to save the world, to save the climate, to save the environment, to save literally anything. But now you can have an electric car that performs better than most any other car, especially in terms of acceleration, and it looks like a great but normal car. And normal in this case is good because the mainstream acceptance of a transformative technology is exactly what the climate needs. Yet Grantham still owns no stock of the company. Matter of fact, if you're to look through his hedge fund's holdings, could you guess what their automotive investments are? Remember, climate change is the most important thing for Jeremy when investing.
Doing that because we have climate change, the most important issue in the investing world for the next few decades.
So we know he doesn't own Tesla. What about other domestic EV manufacturers? Rivian? Nope. Lucid? Nope. Does his fund own any car companies for that matter? Yes, they do. They own GM, Stellantis, and Ford. I personally thought climate change was everything. Quoting Jeremy, the most important thing in the investing world for the next 2 decades. By the way, if I was to ask you what the source of the pollution that everyone is concerned about in the transition to EV vehicles is it the burning of the derivatives of oil? If so, who extracts oil? Do we know any stock tickers or companies offhand? Exxon, that's a good one. It's pretty obvious. Chevron, that's another major oil name. That's a little bit easy. What about those names and the 30 other names in the holdings of Grantham, Mayo, von Otterloo? That's surprising, I guess. Maybe the climate isn't too important this decade. It's the other decades to follow where it becomes important, I think. My intent is not to highlight the misgivings of Jeremy because his insight about Tesla raising money brings us to our last point for the video and something I'm not sure people really appreciate much. It's the cash in Tesla's balance sheet. Tesla has raised billions of dollars and generated billions in free cash flow since Jeremy Grantham bought his first Tesla Model 3. And as of now, that balance sits at around $23 billion. We hear calls from the likes of Gary Black to use that cash for buybacks because he says it would be the best use of the money. But if you heed Elon's warnings and listen carefully when Jeremy speaks, you understand the cash is what will make us all successful.
I mean, one day it seems like the world economy is falling apart, and the next day everything's fine. I don't know what the hell's going on. To be totally frank, I wish I did, because I care a lot about the sort of the small shareholders, especially ones that have stuck with us through thick and thin. I love you guys. And we can't control these macro shocks, or the manic depressive nature of the stock market. So that's why but we're in, I would call it, turbulent times.
Maybe Elon is right that it's going to get rocky in the near future, or maybe Jeremy's right that we're all doomed. But the billions in cash, that's what's going to make the difference and eventually overtake legacy automotive in sales. The ability to invest in your own company when others can't. Sure, GM, Ford, and Stellantis, they have record profits, or so the UAW says, but are laden with extreme amounts of debt. Don't be surprised to see CapEx continue to increase for Tesla, and don't be surprised to see free cash flow always be barely positive in the quarters to come, because Tesla is leveraging that spend to separate the gap between them and the rest of the pack. Jeremy said it himself, build factories to beat the competition. So Tesla should build more factories, build out the charging system, build new models, and innovate, even in the face of economic uncertainty. It's Tesla's cash and lack of debt that'll be the unsung heroes as rates climb, when money gets more expensive, and when the average ordinary American tightens spending in the face of high living costs. Your investment in Tesla doesn't only improve on the back of AI or the Cybertruck, but the means to pay for all of its development.